Well, howdy there, folks. You may or you may not have heard the news, but Cathy Wood is once again selling Palantir stock. We're going to speak about that in this video. I want to give my opinions and perspectives on Cathy Wood starting to dump Palantir shares, okay? Then we're getting some reactions to a few videos here today, okay? 2024 will be another year of growth and drama for Tesla. So looking forward to hearing that video there from actually a former Ford CEO, Mark Fields. Then we're getting to this one. This gentleman's going to speak about a lot of tech stocks, Amazon, and many other stocks in this video. So I want to hear his opinion, react to that one. Then we're going to get into, I haven't seen this guy forever, Gordon Johnson, the number one bear over the years in regards to Tesla stock. Gordon Johnson. Teslas are unreliable, unsafe, don't have mileage, and consumers are moving away. Okay, Gordon Johnson, this should be interesting. And the last video up here we'll react to is the Santa Claus rally can continue into 2024. I think this should be a fun one to listen to. And the reason being is a lot of people are trying to figure out, like, this big rally we've been on, is this end, like, right at, New Year's Day? Is that it? Or do we keep running into 2024? So appreciate you guys joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. Appreciate each and every one of you for being here as always, okay? So first off, let's talk about this Cathy Wood situation, right? She's dumped over 100,000 Palantir shares, which I'm sure there's a lot of you guys watching this video right now that are like, dang, man, I wish I held 100,000 shares of Palantir stock. That would be amazing, right? And so she dumped a bunch of shares. It's going to be for one excuse or another. Oh, it's to put it into this, it's put it into that. There's always an excuse with her, right? There's a reason that when I saw, she bought Palantir this most recent time, which was after it already started going up massively. There was a reason I wasn't that excited about it. And I was like, whatever, cool. Like because I understand Cathy Wood. She is supposed to be this long-term investor, but many times she'll be in and out of these positions. And 1 minute she's buying a stock 1 month, and the next minute she's selling the stock the next month. And it's like, wait a minute, I thought this was supposed to be like a long-term hold or something like that, right? And it's not that way, right? If I look at her portfolio now at this point in time, I hadn't really looked at her portfolio in depth in a while. This is the Stock Circle website, kind of keeps track of everything, right? Coinbase, she just finally got profitable on Coinbase, it looks like, right? And Coinbase has been super hot, and the reason Coinbase has been hot is only because Bitcoin's been obviously having a roaring year, right, along with the NASDAQ. UiPath, she's still down massively on that. I was looking at Tesla. She must have gotten some bad praise, because I remember back in the day, Cathy Wood was buying Tesla when I was buying Tesla. And so I'm like, why is she only up 200%? Look at how much I'm up on Tesla, 989%. This means likely Cathy Wood was, throwing tons of money into Tesla stock, probably in the 300s, if not even higher than that, maybe all the way up to $400 a share, right? And then just buying at probably some poor prices, and maybe even loading up in the 200s. But yet, look at her positioning of the portfolio. It's all the way down to just over 6% position for Cathy Wood. Tesla used to always be 10% of the portfolio, and she used to use it as an excuse to sell Tesla anytime it went over 10%. Like, oh, I just want to keep it at 10%, which is strange because now Coinbase is technically over 10% of the portfolio. So little strange in regards to that, right? But I mean, she always has a reason that she dumps out of these stocks, and seeing even her Tesla be only 6% of the portfolio, that just shows me she's got less conviction in Tesla. But I mean, you look at these shares, and it's like, where is she making money? I mean, look at her average prices. She's not making money in anything, pretty much. I mean, it's a disaster. I mean, slight gains on coin now. Tesla's the big winner, but that's not even that much of a winner, right? I mean, look at this. Shopify, 11%. This is bad. This is really, really bad. And so at the end of the day, like, I don't know what Cathy was up to. I don't know if she's moving more toward Bitcoin or what she's doing here, but I'm just here to tell you, I really could care less about whatever she does anymore nowadays. It's just, her performance it speaks for itself. If this was my portfolio, I would just quit stocks. Like, literally, I would just quit stocks. If this was my portfolio and this was all my positions, I'd quit. I'd be like, it's not even worth it anymore. Like, this is just ridiculous. Because this is a disaster. Let's just call it what it is, folks. So anyways, she's selling Palantir shares. Who knows? Maybe she'll sell more shares. Who knows even why she bought Palantir? Like, maybe it was only for the publicity. I have no clue. And honestly, I really don't care. So that's kind of my 2 cents on that whole Cathy Wood. Next thing, she's buying a stock. Next month, she's selling a stock, whatever. The game is the game, okay? All right, guys, let's get into these videos here. 2024 will be another year of growth and drama for Tesla.
Asking for a Tesla recall following a Reuters investigation that alleged Tesla used a number of faulty parts it knew were defective. Tesla issuing a long response on X, rebuffing the claims. The stock has had a banner year in 2023, more than doubling. Can that hot streak continue as the headlines pile up and Elon Musk continues to be preoccupied with X? Former Ford CEO and interim Hertz CEO Mark Fields joins now with his outlook for Tesla in 2024. I just want to read you part of this statement from Tesla because,
just to dial this back one last time, the problem with these losses is, keep in mind the S&P 500 and the NASDAQ and the Dow are all near all-time highs. All-time highs. Folks, if your portfolio looks like this, when the market's at near all-time highs, don't do stocks anymore. Don't do stocks anymore, okay? Don't do it. Holy smokers, that's no jokers.
They acknowledge the article, say they published an article that leads with wildly misleading headline, is riddled with incomplete and demonstrably incorrect information. And then they go through point by point what they see as wrong. For instance, blaming the drivers for failures, the reality Tesla paid for most of the 120,000 vehicle repairs under warranty, et cetera, et cetera. Does this seem like it presents a big risk for Tesla?
Well, Sarah, every car company has their issues on quality around vehicles. I think the interesting thing about this is they do note that they've repaired about 120,000 vehicles. That's a large percentage for the number of vehicles that they have in their, what they call the car park, all the vehicles that they have out there in the marketplace. That's the thing that sticks out. When you have that large of a percentage, usually where there's smoke, there's fire. And listen, as you know, Sarah, in the article, Tesla does not have a communications department. So, trying to kind of work with the writers to kind of clarify things.
Tesla doesn't have a communications department? Hold your horses for just a moment, sir. Have you ever heard of a gentleman named Elon Musk? That's all the communications department we need. It's just Elon, okay?
Come out with that's not Tesla's MO. So, this is part of the ramifications of that.
I was wondering if this came from Elon Musk himself. I'm not sure who's running communications there. As far as the stock performance, Mark, there's a lot of optimism around delivery numbers, which we should get next year. What's your sense of demand? It was a year that we expected demand to fall off, and it did a little bit for EVs, but not so much for Teslas, especially with the price cuts.
Yeah, you're exactly right, Sarah. Beginning of last year, Tesla got very aggressive with price cuts. It depressed their margins, but it did increase their volumes. And I think that's partly reflected in their stock performance this year. I also think when you see some of the established automakers like GM and Ford and others who have, recently announced that they're pulling back on some of their aggressive EV investments, that's also helped the stock. And I think as you look at 2024, I think it's going to be another year of growth and drama for the company. Probably less so on growth in 2024 because there's no new high volume products. And who knows on the drama? That'll be either more or less depending upon Elon and how he go about things.
Elon. Okay, wait a minute. No high volume products? No new high volume products? Sir, in all due respect. Cybertruck's going to be an extremely high volume product. It really is going to come down to how fast can Tesla ramp that truck. But the demand is there. If Tesla could produce 200,000 Cybertrucks next year, they would sell every single Cybertruck, no problem. If Tesla could make 400,000 Cybertrucks next year, they would sell 400,000 Cybertrucks next year. That is going to be a high volume product. I can tell you that much. With how many people are on the waiting list for Cybertruck, how many people want that? That's a very high volume product. It's just, obviously it's going to take a while to ramp that baby up to, let's call it, really start rolling. Okay, let's listen to this gentleman speak about some tech stocks here, including big position for me, Amazon.
We asked traders and analysts to go big or go home. We challenged them to give us their best idea on the stock that they thought had the biggest potential upside heading into the fourth quarter. Now it's time for a progress report. Let's bring in James Chakmak, partner and portfolio manager at Clockwise Capital. His pick, Amazon. The Magnificent Seven member had already put in some strong gains throughout the first 9 months of the year. up 59%. The strong run continued in Q4. Amazon up another 20% with just 2 days to go. You know what? Go ahead, James. Take that bow. Pat yourself on the back. I'm going to clap for you. What a pick there. Congratulations. We gave you your props. We got to move on now. Looking ahead to Q4, what are you expecting for Q4? Are you expecting Amazon to continue to be strong? And if so, what's the catalyst for that strength? Is it the e-commerce business? Is it the cloud business? Is it the ad business that's kind of a sleeping giant? It's a $12 billion business last quarter.
Yeah, Frank, I think it's all the above.
Really?
You know, now there's talks about reports on advertising being part of the Prime Video experience for 2024. So that would just be incremental on top of everything. But really, the driver for Q4 is going to be about continued operational efficiencies and adding earnings power to the bottom line.
Estimate target 175 for 2024. So that's not that big of upside, right? Amazon's 150 plus right now. And then he's talking about the stock would break 200 in 2025. I think if the market's decent, let's call it a 5 to 10% gainer for the S&P 500 in 2024, I think Amazon probably breaks 200 in 2024, assuming the S&P 500 is up in that 5 to 10% range.
That's what we saw for the last 2 quarters, and I think that trend will continue. And when this has been a stock always talked about how expensive it is, north of 100 times earnings. How can you buy a company like that, even though it's cheap on a sales basis? But I think within a year or two's time, you're not looking at an expensive PE multiple anymore. This is a company that is trading in the 30s on a PE basis just 2 years out, giving the earnings power of the company. So, we continue to like it, see about 15% to 20%.
So right there, forward PE is 52 on Amazon. And yeah, I mean, if you look at Amazon, if you've researched Amazon stock any time in the past 15 years, really honestly since the company went public, but let me just speak about since I first looked into Amazon, which was probably either 2010 or 2011. I was like, man, this Amazon company is just going to keep growing. Like more and more people are going to be ordering online. I was starting to order a few things from Amazon here and there, kind of around 2010, 2011. And I was like, this just seems like, a company that's going to get bigger and bigger. I wasn't even thinking about AWS back in those days, right? But I remember looking into the company and it was expensive. The forward P was high. Guess what? It's always been high. It always will be high. But then Amazon eats that up. They eat that up because they get more profitable. Then they'll take a step back in their profitability. Then they'll all of a sudden emerge a lot more profitable. I think you'll see in 2024, 2025, this company, you're going to be pretty shocked by the earnings per share this company's going to put up over the next couple of years. It's going to blow people's mind. They've been in a huge investment cycle over the last several years. And I think we're going to see Andy Jassy really put together some crazy EPS numbers over this next couple of years here. That's going to make everybody say, oh my gosh, Amazon at $100 and at $150 was actually a cheap stock when the stock's 200, 250, 275. And, they'll look back and be like, wow, we didn't see this EPS coming. I've seen Amazon do it several times throughout its history, and I think it's about to do it again. So we'll see how it all transpires. But, it's always going to look expensive. As long as Amazon's got good growth, it's always going to look expensive, right?
An upside in 24 and another and about 35% to 40% through 2025.
All right, so you're maintaining that conviction in Amazon. I kind of teed you up with the ad business. We're actually here talking about the fact that you're going to have to pay extra to avoid the ads on Prime Video next year. When I'm watching The Boys, I don't want to see ads, but that's my problem. I'll digress. I'm going to look ahead to your pick for 2024, and it's Coinbase. You have a lot of conviction when it comes to the cryptocurrency space. Just looking at the Coinbase chart, huge year for Coinbase. Then you look in Q4, up just about 150% this quarter alone. Give us a sense. What's a catalyst for this stock going into next year?
Oh, sir. What's a catalyst for the stock for next year? If Bitcoin goes up. Literally, if Bitcoin goes up and it's at 60,000, 70,000, something like that, guess what? Coinbase stock's going to go up a whole bunch more. Like, it's as simple as that, right? If Bitcoin price, let's just say, starts kind of sputter here and it doesn't really move above, like, let's say 50K, then Coinbase stock will actually start falling. And then obviously if Bitcoin was to go down in any substantial way, Coinbase stock would fall substantially.
So this is a company that we wanted to own basically since the IPO, just couldn't justify the price. We finally got in August before this run up. So fortunate on that front. But, when you have a tremendous run like this, it's really hard to say, okay, it's going to go further. But we think it will. And not only go further, but go further in a big way. We're looking to increase our exposure across the entire crypto bucket, whether it be through miners, through Coinbase, or what have you. So Coin specifically, I think that the street is just not fully appreciating the revenue potential of this company. The reason we bought it in August was because the Street's estimates essentially assumed that Bitcoin would not appreciate a dollar above 28,000. Obviously, that was wrong. Now, when you look into 24, 25, the Street is currently assuming 0%.
Anybody that was buying Bitcoin in the past year made a big mistake. Should have been buying Coinbase. You got over a double up of the performance. By the way, Coinbase, I got to say, man, it was a pretty interesting buying opportunity at the beginning of this year. And the reason being is almost all their competitors went under in 2022, so you didn't have to worry about that anymore. And obviously, Bitcoin was in a pretty depressed state where no one seemed excited about it at all. I mean, the price was all the way down to, 15K or so? So, yeah, I mean, the risk reward was, pretty attractive there, at least at the beginning of the year. It's a whole different story now at this point.
Growth from 24 to 2025. And we think that's outrageous. So we think a lot of upside to revenue, a lot of upside to earnings. This is a must-own.
Yeah, Coinbase certainly going into the new year with a whole lot of momentum. James, stick with us just for a moment. We want to talk about the world's most valuable company. It's, of course, Apple. It's had a pretty solid year from a stock perspective. Shares are up about 50%, but it has not felt that positive if you're an Apple investor. The company reported several quarters of falling revenue, and it faces a litany of challenges as we head into 2024. Steve Kovac joins us now. Steve, good morning. Great to see you. Is the path a little clearer for Apple to return to growth next year?
Yeah, let's go over this because this is the biggest question, Frank, for Apple investors going into 2024. Will it finally return to that top line revenue growth following 4 straight quarters in a row of declining sales? And on top of that, Apple said to expect flat sales for the current December quarter. Despite that, Apple shares, it's part of the Magnificent Seven, just soaring all year. And now, looking ahead to 2024, what could return to growth? We got good news and bad news. Let's start with the bad news. Headwinds in China. We know Huawei is returning, coming back and putting out new smartphones again for the first time in a few years. That is real competition for Apple. There's some data out there that people are switching back from iPhone over to the Android Huawei phones. Meantime, we're also this online gaming crackdown from the Chinese government, which, these online games and certain restrictions around them, that also could damage Apple's App Store revenue. And of course, as we've been talking all year, that slow economic recovery in China. Over to the U.S., though, Apple, that watch ban is still being worked out despite the reprieve yesterday. That fight is not over yet. And now the good stuff. Services growth, re-accelerating that high-margin business. It was up 16% in the September quarter. And there's also, on the hardware side, some signals that PC and smartphone demand may have bottomed out and could start growing again. Here's what won't move the needle, though, Frank. The new Vision Pro. That headset is going to be a small launch, possibly as early as February. It's going to be in the U.S. only at first. It's not a mass market device, Frank, but it's going to be interesting to see how Apple sells it.
So, Steve, you mentioned the Apple Watch news. How big is this for the company?
The best news for Apple, in my opinion, for 24, and the reason their revenue could start trending back up, is consumer confidence, right? If the consumer gets in a better spot in 2024, they feel more confident and they're just in a better financial position because they're not sliced and diced by inflation. That's good for all these big dog companies, including an Apple, in a substantial way, right? So, maybe the people that have pushed off buying a new iPhone over the last couple of years, maybe get out there and get one at some point in 2024.
In 2024.
Yeah, I'll point to what Morgan Stanley analysts have said, looking forward to the March quarter for Apple. They're basically saying 2% of revenue is on the line. It could be up to $135 million for every week the watch is banned. Now, they have this reprieve right now. They're going to be able to sell the watch here in the U.S. starting yesterday and then online today through at least January 15th until the next beat in this legal fight continues. In the meantime, Apple is working behind the scenes to kind of change the software to potentially get around these patent disputes. But it's not a done deal yet, but at least for now, there's a little bit of reprieve for the first couple weeks of the new year.
All right. Our Steve Kovac, live at the NASDAQ. Steve, thank you very much. All right, James Chakmak of Clockwise Capital still with us. James, coming back over to you. What is your take on Apple's year ahead?
Yeah, I agree with Steve. They have a litany of challenges to overcome. But that being said, I do think that estimates have indeed bottomed out. And I think that the dark horse for their business is going to be on the PC side. As long as you see that Mac business reaccelerate, I think the status quo on the other lines, continued traction on services should be able to propel the stock higher. Now, that being said, I'm looking at about $210 as I look at 2024 numbers. So I think it's going to be a safe and steady grower and appreciator, especially as those estimates bottom out and you revert back to growth. But I'm going to be putting my big bets elsewhere.
Yeah, 100%. Okay, next one up here. Gordon Johnson. Teslas are unreliable, unsafe. Ooh, okay, Gordon Johnson.
Dominate the American EV market.
By the way, if there's anybody watching us right now, you don't know Gordon Johnson. He's a man that's been very bearish on Tesla over the years. And it's been quite interesting to see it play out. And when I say years, I'm talking like at least 5+ years. This man has been bearish on Tesla and has negative things to say about Tesla all the time.
Let's take it to our panel tonight. We're joined by Gerber Kawasaki President and CEO Ross Gerber and GLG Research CEO and founder Gordon Johnson. I actually think, guys, that you don't agree on much, but I have a feeling that you should, I think, Ross, agree with Gordon on this, that BYD, whatever you may think of them in their Dolphin or Yuan Plus cars, is a threat if they come here.
Hilarious.
Well, I don't look at it as a threat per se. I think BYD is an enormously successful company and probably one of the best companies in China across the board. But it doesn't make it a threat to Tesla in that 90% or more of the people still are buying gas cars. I think the biggest threat that BYD and Tesla face is to the Fords, BMWs, the Volkswagens of the world. So I look at them as very complementary companies. They're very similar in a lot of ways, and they're both excellent companies.
Gordon, would you agree?
No, I disagree. Look, BYD
I was wrong again.
BYD is cutting prices significantly in China. Look, in last quarter, third quarter, where Tesla's sales were actually down sequentially. I'm going to look at my notes here. Their market share in China fell nearly 220 basis points from 2Q to 3Q. And from peak in China, when their market share was 27% in 1Q of 20, it's down to 8.6%. Their market share has collapsed. But here's why. Let's focus specifically on why Tesla's market share is falling. If you look at Consumer Reports, what car, JD Power, they rank Tesla last or near last in quality. Edmunds ranks Tesla as the only.
Is that what people in China read? Do people in China read this?
Of course. But hear me out. Edmunds ranks Tesla as the only company whose EPA stated range, its actual real world range for every single car is lower than its EPA stated range. So you're not getting the range. And then just the other day, there was a study that came out from LendingTree that stated Tesla's cars are the least safest out of all 30 cars they tested.
They're about to have a record in China.
That's just not factual. Like what? Like Tesla cars? Are you kidding me? Look at the safety tests for Tesla cars. Like, are you kidding me? Like, they always outperform basically everybody in almost all the crash tests. Like, what?
3.54 accidents per 1,000 cars.
This is Tesla's best quarter ever in China.
Yeah. The point is this. Tesla's cars are unreliable, unsafe, and don't have the mileage. We've been saying this for a long time. And what's happening is the consumer, right? The consumer is moving away from Tesla. One last point. Just today, we found...
As somebody who's been driving Teslas for years, I've never found them unreliable, I can tell you that. Once again, the safety tests, you can look up the safety tests in regards to Tesla. Like, they almost always perform better than pretty much any vehicle out there when it comes to crash tests. And then as far as the mileage go, listen, this is the same thing like, a car gets 30 miles to the gallon, right? Well, you got to drive it perfect to get the 30 miles to the gallon. Same thing with Tesla. If you drive it perfect, you can get the mileage, right? But people don't drive perfect. They hit the gas way too hard and they accelerate and they go too fast. They don't go the ideal speed and all those sorts of things. So, like, under ideal driving conditions, sure, it can get that mileage. But, it cracks me up, man. Gordon Johnson, I don't think there's ever going to be a day where he's not negative on Tesla.
Did
I tell you guys about the guy I met recently here in Vegas? This was probably like a week ago, 2 weeks ago. Met a guy here in Vegas. He drives from Canada to Vegas all the time, and he's got a 2014 Model S. He told me he's got over 200,000 miles on that baby, which I've never met anybody that has a Tesla that has over 200,000 miles, only over 100,000. So he's one of the few. And he says he's never had any major issues with the car ever, with over 200,000 miles on that car. I was very happy and pleased to hear that as somebody that's been driving Tesla since, when did I get my first Tesla? I think it was 2019. So I was like, heck yeah, that's awesome, man.
A number of axle failures, right? Suspension failures they knew about. Right,
but Gordon, I got. We're going a little bit. We're going a little bit off the. We're going a little bit off the rails here, Gordon. I just want to say that's what you said is true.
Gordon always goes off the rails.
GM just stopped selling its Blazer EV. Toyota had a massive recall because of further airbag issues. Every car company has recalls, or don't come at me, Teslarians.
Yeah, and the difference is Tesla just does an over-the-air update that you download and it's done. Versus these other guys, got to take it in the shop. It's super inconvenient, super costly.
Or over-the-air software updates, whatever you want to call them. Every car, Gordon, has a problem. Everybody.
Well, Sally, you got to take a step
and you're
back.
missing the overall point, which is this is not stopping people from buying Teslas as they have a record.
Okay, hold on, Ross. Right? Let Gordon respond to my pseudo rant, and then you
Sally,
can.
I want to address that head on. Other companies do recalls. Tesla did not do a recall. There was a whistleblower who was an employee at Tesla who basically turned over a bunch of information to Handelsblatt, who now Reuters now has that data, that basically stated that Tesla knew its cars had faulty suspensions and they didn't do a recall. And then Tesla's response to that was, we fixed 120,000 suspensions. The reason why that's eye-opening is because there's other cars out there, millions potentially of cars in the United States where they haven't fixed the suspension or done a recall. Okay. That is a huge problem. That's putting all of us at risk.
This is like if they're watching, I love all it's like my Christmas, it's family dinner at Christmas, okay? We started on one thing and sort of went over here. I want to bring it back a little bit, Ross. What I want to talk about, and it's a good discussion, by the way, but I want to talk about BYD. Let me ask you a direct question, because we don't know what the labor conditions are in BYD. We don't know. The Chinese government can subsidize them. Should BYD cars even be allowed ever into the U.S. market?
Well, absolutely. I'm a capitalist. I don't think we should.
But they're not.
The market.
But China's not.
Yeah, I know. But that's their, government and their choice. America doesn't change capitalism just because we don't like a certain group of people, right? So, Chinese should be able to sell cars here just like everybody else.
I don't think it's liking them. I think what I worry about is we covered the UAW strike extensively, right? These are hardworking people in Detroit just trying to make a living, like the middle class dream. BYD could be paying people $5 an hour to make a car. We could never compete with that, Ross.
Right. And I think that's the government's job to set tariffs and policies for trade.
Exactly. Or, very simply, you want to sell BYDs in America, build them in America. That's not complicated at all, right?
Not really we should just decide not, consumers also actually make this decision of whether they want to buy a Chinese car. And I think that's the biggest factor that BYD faces, that American consumers don't want a Chinese car. So if you see what Geely did by buying Volvo and using the Volvo brand, even though it's a Chinese company, that's, I think, a much smarter strategy to breaking into Europe and the United States market. So I think the biggest risk BYD has is the fact that Americans just won't buy Chinese cars. But keeping them out of the market isn't really, capitalism.
I do worry, though, Gordon. Listen, I think we said the same thing about.
Yeah, I'd be thrilled to have BYD come to America as long as they build the cars in America as well, right? And the reason being is I think it's an actual serious EV maker, and we can build the EV market faster with a company like BYD here, right? And what's a company like BYD going to do? They're going to ultimately partner with Tesla as far as the supercharging network goes, which would obviously expand Tesla's opportunity there. But a lot of these traditional automakers just are not getting anybody excited about EVs. They're just not doing it, right? BYD at least would have a chance.
Japanese cars in the late 60s, no one's going to buy them. They're small and cheap looking. I think we said the same thing about Korean cars, Kia and Hyundai in the late 80s and early 90s. We're still saying that about French cars, and that's okay because it's accurate. But you get my point, Gordon, which I wouldn't underestimate China. Do you think they should be allowed in the U.S. market?
Absolutely not. And let me tell you why. Ross kind of is not focused on the specifics here. China has three key subsidies. Cheap labor. They use slave labor to manufacture a lot of their products. Artificially low, basically borrowing costs for their banks, and artificially low energy prices. That is not fair. That's not a level playing field. That's not capitalism. So to allow those cars in here and them to undercut the American automakers, thus killing jobs here, creating jobs over in China, I think is unfair. And Ross knows this, right?
But we're subsidizing EVs here in the United States.
They're taking subsidies away from even Tesla because they're making a lot of their batteries, some of their batteries in China and shipping those cars over here. So you got to level the playing field. You can't have guys using slave labor to make their cars and then shipping them into America where we have to pay competitive wages. That's not fair. That's not capitalism.
100%. That's why, once again, BYD wants to sell cars in America. Fine. Build them in America. Don't ship them in, right? Alrighty, next one up here. Last one, actually. The Santa Claus rally can continue into 2024. I think this should be an interesting chat here.
Liquidity, low trading this week. Do you believe it continues for this half a day and the last day? Does it continue into 2024?
Frankie boy, Happy New Year. Good to see you. I don't call it a Santa Claus rally. I've been around for a long time. I call it a career security rally. What you're basically seeing is people who don't want to get fired from the asset management business in January. And we see this in years where there's just enormous performance going into Q4. A lot of the things that people were worried about end up not happening. And then all of a sudden, professionals look at their asset allocation, look at the degree to which they're trailing whatever their benchmark is. For some, it's the Russell 1000. For others, it's the S&P. For some, it's the S&P, but in real life, it's actually the NASDAQ because they pitch themselves as growth managers. But this is a phenomenon that takes place across the entire spectrum of professions on Wall Street, whether you run a mutual fund, closed-end fund, separately managed account, wealth management CIO, outsourced CIO. You might be somebody that's at a family office. It doesn't matter. In the end, you cannot have a NASDAQ up 50%, cannot have an S&P 500 up 25%, and be sitting with the amount of cash that a lot of people are sitting on. And that's why last week we had the largest single-day inflow of all time to the SPY ETF.
Wow.
That's not delicate. That's not a sniper rifle. It's a shotgun. It's get me in. I don't care how. We'll figure out the particulars after. And it's not surprising that you'll see this carry through to the end of the year. So Santa has nothing to do with it. People want to keep their jobs. We talked about this on the show pretty much nonstop for the last 8 weeks, and that's exactly how it played out. Merry Christmas.
Josh Brown says staying employed is really the gift that keeps giving. Brent, I'm going to come over to you. Josh says it's not a Santa rally, but what's your take on some of the action that we're seeing? Again, we're in record high territory pretty much across the board.
Yeah, well, I mean, I think going into 2024, as the S&P is close to its all-time high, you have two decisions to make. Are we making a double top, or is this actually we're going to push through, and next year we're going to have a softest type landing? You know, Ned Davis, who does great research, put out a piece that shows once the S&P gets through an all-time high, and it's happened 14 times, you know, looking back since the 60s, what happens 1 year later? Well, the median return for the S&P is a little over 13%. And so if you can make the S&P, which is very different than the Dow, get over that all-time high, and we still have this narrative around this soft landing that the Fed has done, I think we will continue into January. But I do have a sense that as we get later into the year, especially February, getting closer to that March meeting, I think once if the Fed does not decide to cut rates, which I don't think they will in March, I think that's where you're going to see more volatility as the market has to push out its 6 to 7 rate cuts per year, which I just think is just too bullish or too ebullient that the Fed would actually do 6 or 7 rate cuts and we still have a really strong economy.
Yeah, Bren, by the way, we're just showing the audience right now while you're talking, less than 1% away.
Let me show you guys how the market usually performs in the first quarter of an election year when the sitting president is running, okay? So if this trend is, similar in 2024 like we've seen in the past, and that's a green line, follow that green line there, we should, in theory, have a banger of a January into the beginning of February, and then let's just call it shortly before Valentine's Day, the market should start pulling back, and we should pull back all the way into a pretty big kind of move down there, all the way into March, and then start a recovery just before we get to April, and then kind of have a good year from there. That's seasonal patterns going back, obviously many decades, 7 decades ago or so, right, for sitting presidents. So I don't know, we'll see. Yeah, but that's just kind of the usual seasonal trend. So If that plays out, we'll have a really good January into the very beginning of February. Then the big pullback will happen.
Record close, I believe, 0.5% away from the intraday high. Kevin Simpson, I'm going to come over to you. What do you think about some of the action we're seeing in the market? And just a complete sidebar, a lot of Philadelphia energy here on the show. Like I said, Bob Pisani's right here.
Well, you need to give some of that to the Eagles, Frank. I think it's absolutely Santa Claus, Josh. I mean, come on, don't be a cynic. The portfolio managers aren't going to try to do anything from a momentum trade or window dressing or year-end manipulation. I mean, that would be crazy.
So I thought he was being serious for a second. I was like, what?
Truthfully, we saw them pivot 2 months ago. I mean, that was the game changer. If you look over the landscape for the past 2 years, Frank, it's not that much that's happened, but so much in terms of 22 being a really lousy year, 23 being mostly a consolidated AI rally, and then all of a sudden we saw breath. And it makes sense because once you have a Fed that's backing off, no mas in terms of rate hikes, you can get back to the business of pricing companies properly. How much money do they make? What kind of multiple do you put on it? And I think the enthusiasm is certainly justified. Are we a little bit ahead of our skis? Is Josh's point somewhat valid? I mean, absolutely. But it can continue into 2024. This isn't something where I want to see the calendar year end. I wish we had another quarter in 2023.
Oh, man. All right, guys. Appreciate you joining me as always. Thanks so much for being here. Thank you for being subscribed to the channel. Also got a workshop for you guys. It's the pinned comment down there. Goes exactly into how I'm going to be investing in 2024. Talk stocks, real estate, everything across the board with obviously everything going on. I think it's getting close to 2,000 people have been able to watch that video, enjoy that so far. So it's absolutely free to get that access. Pin comment down there, and I can email it over tonight or tomorrow or something like that. Okay. All right, guys. Much love as always, and have a great day.